Stock of the day, I thought we'd take a look at Nickel Industries is tapping investors for $673 million to expand its partnership with Chinese shareholder Shanghai Decent. The funds will be used to buy an indirect 10% stake in Shanghai Decent's Indonesian nickel cobalt project. Shares in the $3 billion group last traded at $1.12. Carl, what do you think of Nickel Industries and the raise, and what's it look like at the moment?
The raise appears to be happening at $1.02, so that's a pretty typical discount, isn't it? So $1.12 last traded price, $1.02. It could have been a lot worse, I think, for investors. So that's, I'm going to say, a minor positive. Look, there's plenty of support for it, I think, down and around that dollar level. That chart's a really good example of what I'm looking at as well. So you can see there was obviously a bounce off that late October low up to that point. So that big underperformance, got a lot of clients that follow this stock very closely. That was because nickel prices came off after the invasion of Ukraine. You can see that peak early in the year. Plus, the Chinese property market's in a lot of trouble, Koshi. I know they're throwing money at it, but it's still in a lot of trouble. And these guys produce the nickel, not for the electric vehicle batteries, the big growth story. They produce nickel for stainless steel production. Yeah. So that explains why they've done so poorly. So this story is very much pegged to the China reopening play. That's why you got to the end of October and it's accelerated even further than the underlying nickel prices, because it's more about they produce a different type of nickel pig iron. It's a lower grade. It goes from Indonesia, where they're based, all their operations, it goes straight to China, right? So the LME, the London Metals Exchange nickel price is almost irrelevant to them. It's all about their contracts into China, right? So it's a China recovery play. Now we get to today's placement. Today's placement is about funding a very small, at least initially, investment into the nickel matte area. Okay, so nickel matte is a higher grade nickel that's used for electric vehicle production. Tsingshan Holdings, which is Nickel Industries' partner in the Indonesian nickel operations, came up with quite a controversial process for converting nickel pig iron, very low grade nickel, into nickel matte for electric vehicle batteries. And that announcement caused nickel to go limit down. We talked about this. We probably talked about this a year, maybe 18 months ago. I don't know if you remember. Caused huge volatility in that it basically changed the whole dynamics of the nickel market. You could just create, this high-grade battery material from very low-grade nickel. So it seems that process is working. This Shanghai Decent is using that process to actually make nickel matte. They've produced a very small amount of it at this time, and this announcement here is to get 10% of skin in that game, amongst a few other things, including paying down debt and funding on operations. I know there's a lot to unpack there, but I think I've covered enough of it for viewers. In terms of the technicals, happy to hold it. Let's see where it opens. Look, who knows? But if it opens, this will be actually a really good indicator. If it opens at 112, this is the most amazing thing to ever happen. The fact it didn't come back to that discount price. It's probably going to open back to $1. I think you can still hold it there. If it closes beneath, I'll give you a number here, that low there, 90. If it closes 93 or less, then it's telling you that market didn't like this announcement. Right. But as long as it's staying above that, I'm okay with it.
All right. Michael?
Yeah, interesting business. It's made the transition really from an explorer and nickel miner solely into a more sort of downstream processor of nickel metals, and that's the transition the business has been really focused on making. As Carl rightly points out, the focus historically has been primarily, or if not entirely, on stainless steel, the nickel used to produce stainless steel. However, they are looking to shift that somewhat and get a bit of diversity in the mix of products that they're able to provide to the market.
And they want to have EV on their marketing.
That's right. They want to be able to say they're aligned to the booming electric vehicle space. So it's probably not the worst decision in the world, just given the state of the Chinese housing market. They have an arrangement already with this Chinese or China Decent with regards to their Oracle project, which is a mine that's up and running now and in production ahead of schedule. I think it's due to come to market, all that production in February. So that will also help improve sort of the balance sheet a little bit. It's not a business that we hold. It's not one we've done that much research into in the past, just given that the fact that it was firstly aligned to the Chinese property space, but also some of the hype that was in the nickel price around that Ukraine, Russia war that's unfolding. So from my standpoint, I'll wait for this capital raising to wash through the system.
Yeah.
Often you do see some weakness after a capital raising such as this before looking at it if you are interested. But at the moment, it's not one that's on our radar.
Right.
So I'm happy to go with a hold, just because
Right.
if those people are in it, you'd want to likely hold and see what the outcome of this capital raising, and potentially you're able to pick up some more shares at a discount.